Hello and welcome to our program on real estate. Before we start our program, which is going to help you learn more about investing and creating wealth out of real estate, I would like all of you to listen to a small story. Let us say we have a time machine which takes us into the future 10 years from today. Let us say we have a time machine which takes us into the future 10 years from today. What is going to happen? Can somebody think about it and tell me what is going to happen 10 years from today? Let us say we go into a time machine 10 years in the future. Okay. A lot of times to imagine the future is difficult. It is difficult to imagine what is going to happen in the future. Let us say the same time machine, we go back 10 years into the past. That is, today we are in 2011 as I speak this. Let us say we go back to 2001 or 2000. What was happening in India or in the world at that time? The world in 2000, 2001 had gone through a lot of crises. One of the major crises that was there was the IT bubble. The IT bubble burst in that era. After the IT bubble, what happened? We had 9/11 happening in America in 2001. Now, what happened to real estate or assets in that era? Whenever there is a crisis in the world, asset prices, do they go up or do they go down? Do they go up or do they go down? Well, I'm sure most of you might have answered the question is asset prices went down. So you had stocks all over the world plummeting. You had airline companies going into losses, and all across the world, real estate prices were suppressed. In major parts of the world, real estate prices were suppressed. Now, I remember in those days, I remember 10 years back, areas in Bombay or Mumbai, we would go around Mumbai and I would see that real estate in Mumbai compared to other parts of the world is still very cheap and undervalued. Now, how could I say real estate prices were undervalued? I'll compare. Now, let us say Mumbai city in those days, you had an area like a Lower Parel. This is mill land, but the location of this mill land is such that it is in the center of the city. Or you had an area like Bandra Kurla complex or BKC, which today has become a prime commercial district where you have the American school, you have the American consulate coming in, you have the French consulate coming in. 10 years ago or 15 years ago, this was all barren land. You didn't have any development there. In those days, you could get land there per square foot. Per square foot of land there was available for as low as 1500 to 2000 rupees. I am talking in 2000, 2001. In a place like Lower Parel, since it was mill land, it was available once again as cheap as 1500 to 2000 rupees a square foot. Today when you listen to this, might sound very shocking or amusing because today even on the outskirts of any major metro in India, or even today tier 2 cities, you cannot buy land that cheap per square foot. Forget land, you cannot buy apartments that cheap. Now, what was happening in those days was two things. One was the world was going through a crisis, and second thing was in India, financial institutions hadn't penetrated the housing market. We will come to that later, that when is it that housing prices rise? When is it that real estate prices rise? Is it when demand rises, or is it when demand, which is always there, is fueled by financial institutions? We will come to that later. But let us say 10 years in the past, you had invested 2000 rupees in this land. 2000 rupees you had bought land. I am saying land was available at that rate, not apartment or built up space. I am saying pure land on which you can construct. Fast forward 10 years today, 11 years today, what would have happened to that 2000 rupees? This is no rumor, this is no speculation. You can go and check the market today. That same land which was worth 2000 rupees a square foot today is not available less than 50 to 60,000 rupees a square foot. What happened in all this? A lot of people lost out the opportunity, and today they say real estate prices are high, unaffordable, and they curse the system. They say there's a lot of problems, there's a lot of parallel economy money, or as people call it, black money. But at the same time, a few people went out and bought that land. I'll share a small story. The time machine, we are 10 years behind or 11 years behind. There was a gentleman, there was a man who bought a small slum, or I could say a small hut in BKC, in Bandra Kurla complex. He had bought that hut, or you could say the small chawl or hut. He had bought it for 4 lakh rupees in 2001. He had arranged 4 lakhs and bought that small to live there. He was a driver. He worked as a driver. He bought that. Now, what over a period of around 8 to 9 years, all that land was being acquired. That land was being acquired by big developers who wanted to build commercial office space, residential, as well as schools, consulates. So they were acquiring this land. He had invested 4 lakh rupees and he was living there. He didn't buy it as an investment, he bought it to live there. Now 8 to 9 years down the line, his monthly salary was 4,000 rupees. He was working as a driver, his monthly salary was 4,000 rupees in Bombay. He was not originally a resident of Mumbai, he had come from outside, but he had managed to buy that. Now he was telling me, he was working for a friend of mine. He was telling me, I have just sold this chawl or hut to a developer for 1.5 crore rupees. Look at the difference, 4 lakhs in 2000-2001, 1.5 crores in 2009-2010. What happened here? He was telling me, instead of investing, he said another 4 lakhs I kept it in my village with a local money lender who was giving me around 11% per year. He said, had I put that money into another property, today I would be worth much more. I said, yes, but you cannot look back, but you can learn from that. Now, what I learned from that is, anytime you buy an asset, anytime you invest in an asset, it will help you in the future. Now, had he, let us say, put this money into gambling, or had he bought alcohol with it, or had he gone out, blown it away on some illicit activity, would he have created so much wealth? Of course, he did this unknowingly, he did not think. But that is what happens when you invest in assets. So when we go back in the time machine 10 years behind and look, let us say we look at the top 100 billionaires in the country today or in the world today. You will see a lot of them didn't have a lot of wealth 10 years ago. A lot of them didn't have a lot of wealth. Even if you see an Bharti Airtel, which came around in 2000, or you see an India Bulls, or you see a Unitech, you see a DLF, you go back 10-11 years, all these guys hadn't made a lot of wealth. But what did they do? 10 years or 11 years ago, they sowed the seeds to create future wealth. So that is what a time machine will teach us if we go back in the past. Let us say we take this time machine and we once again go back into history, which was one period when maximum number of people lost wealth. If we look back the past 100 years, the great economic depression of the 1920s, which hit America, why did that happen and how did people benefit from it? People fail to realize that a lot of people benefited from that. Now, what happened is the capitalist class or business people started producing, manufacturing a lot of goods, but at the same time, they kept the salaries of their employees low. So even though manufacturing was growing, people were not spending. And since people were not spending, the goods that were manufactured were not purchased. So America went through a period of Great Depression. But when the period of Great Depression came, most people, their morale went down, their hopes went down. But in the midst of this, if you see, the maximum number of millionaires in that time, there was not a lot of concept of billionaire, was created post the Great Depression. Because the people who had whatever amount of cash or were able to acquire assets either land, either machinery, either intellectual property at lower rates went on to settle at higher rates. So that is what happened in 2000, 2001, even in India, where land prices were low. And now we come back to today. Today, as we speak, we all know land prices, real estate prices across the country have doubled, tripled, quadrupled over the years. Now, what happens when we take the time machine and say, what will happen in the future? 10 years from now, what will happen? Let us, in our course, try to be a prophet of finance and investing, which will try to figure out what is going to happen 10 to 11 years from today, and how we can make sure that we take the right decisions today so that our future is protected, our future is financially secure, and we are better off in terms of knowledge, in terms of wealth 10, 11 years from today. Now, real estate, that is the whole concept, or that is the whole mission of our course. That is why we are sitting here. And our course today is going to focus on real estate. Real estate is something which has been desired by mankind, by human beings, since decades, or since centuries, or since millenniums. We go back right into the Stone Age, where man had a club and he would go hunting and he would sit around the fire. In those days, when I say man, I am talking about mankind, both man and woman. I am talking about mankind in general. In those days, the strongest leader of the group, whoever was the strongest leader of the group, would have the biggest cave with probably the best paintings on the wall, Neolithic paintings on the wall. And then you come even to the medieval ages. You had lords and kings who wanted to own acres of farmland and land. You had battles being fought for land. You have had wars being fought for land. If you see, most of the major wars throughout human history have been fought for real estate or for land. I don't think anybody has fought wars for stocks or owning stocks, but for land, throughout history, mankind has fought wars, especially if the land is blessed with natural resources. Then you come down in the 70s, everybody wanted a house. Today, everybody wants an apartment, 4 walls, a house. And this is going to continue in the future. We can assume till all of us have our physical bodies in place, we are all going to want land. We are all going to want real estate, primarily for our personal consumption, for the safety and security of ourselves and our family, which we can call home, and later on as assets, as a place where we can park our money. But when everybody wants land, there is a universal concept which has been passed down ages, which says land is scarce and land prices always go up. Since it is a scarce commodity, land is a scarce commodity, everybody wants land, so land prices always go up. Now, I want you to think into this. I want you to think into this concept. Really find out, is land really scarce? And do land prices always go up? Do real estate prices always go up? Well, what happens is, we as human beings have a very short-term memory. We as human beings have a very short-term memory. So, we look back only what is happening into the day-to-day media. So, when real estate prices are going up, you will have media reports saying XYZ land deal was done, highest in the world, highest in the country. XYZ apartment was sold for 50 crores. XYZ land was sold for 100 crores. Land. So that noise in the media, or that information in the media, tends to put a blanket on our long-term vision. So it doesn't help us think independently. But you keep all that aside, or maybe when you're listening to this, the media is saying land prices are plummeting, nobody is buying real estate, it is the worst time to buy real estate. Maybe, I'm not saying for certain, maybe you will hear either of these views. Ignore both the views and question yourself, look at it in a logical way. Do land prices go up all the time? Ask yourself, do real estate prices go up all the time? Now, if real estate prices went up all the time, would that be a good thing or a bad thing? From an investor's point of view, it would be an excellent thing, because you say if they are going up every single moment, I can put money anytime in it. I can put anytime and I'm never going to lose money. If real estate prices are always going to go up, if today it is 100, tomorrow it is 101, day after it's 102, after a week it is 107, then for an investor it is an excellent opportunity, because you can close your eyes, take no risk, put money in real estate and your money will grow. But is it really that simple? Is it really that simple? If it was that simple, nobody would be attending this course, nobody would be thinking, nobody would be putting money anywhere else. All they would do is go out, blindly put money in real estate without any research, and your money will grow. But fortunately or unfortunately, it is not that simple. Real estate prices, like any other asset in the world, the prices keep fluctuating. The prices keep fluctuating, and because prices keep fluctuating, two things. One is people with knowledge can benefit from this fluctuation. People with experience can detect when prices are going down and make the most of the opportunity. And at the same time, people without knowledge will tend to lose money. What happens? Somebody's gain is somebody else's loss, somebody's loss is somebody else's gain. That is how it works. So if today I'm buying an asset, if I am buying an apartment, if I'm buying an apartment or a house or a villa or a mansion for 100 rupees, just an example, for 100 rupees, and tomorrow I sell it to somebody for 120 rupees, you could say that 20 rupees is his loss and it is my gain. Tomorrow if he sells it for 140 rupees, that extra 20 rupees is his gain and the opposite person's loss in terms of monetary terms. Now, what happened? In the recent past, this happened in America, this happened in Japan, today it is happening in China as we speak, in the future it will happen in India. The mass population, the masses, tend to say that in our past 10 years prices have gone up, there is no way prices can come down. And that leads to a lot of chaos, it leads to a lot of confusion, and in the midst of this confusion, you get a lot of opportunities. We will come to that later. But at the beginning of this course, I want all of you to be clear that no asset in the world, including real estate, will always follow a single trajectory. That is, it will never be that any asset price constantly keeps going up, up, up. Just like life, it will have ups and downs. You see any asset price in the past 100 years, any, and this is my challenge to you. Show me one asset which has just gone up, up, up without any downs. There is nothing. There is no asset which just keeps going up. Similarly, real estate will have prices when they move up, down, up, down, up, down. Now, for anybody starting out to invest in real estate, there are a few advantages of investing in real estate and there are a few disadvantages of investing in real estate, just like any other asset class. But before we look at the advantages and disadvantages of real estate, let us understand the term real estate. What does the term real estate mean, or what does the term property mean? Property is a smaller term, real estate is a larger term. Real estate includes various types of properties. So you have got commercial properties which are sold or leased to offices. You have got residential properties, you have got lands, you have got mansions, you have condominiums, you have got apartments, so you have a lot of sub areas in there. But real estate, the term real estate has nothing to do with it. People misunderstand and say the term real estate means it is real. That means this estate or this land is real, we can see, we can touch. Yes, that is true, but the term real estate comes from the term royal estate. So in the Middle Ages in Europe, most of the land was owned by the royal class, that is by the kings, by the princes, the princesses, the dukes, the duchesses owned most of the land. So they owned hundreds of acres of land, farmland, commercial land, market areas. So royal estate, the estate belonged to the royals. Now what did these royals do? these royals did not sell their land. They gave it for a small monthly rent to the peasants, to the businessmen, to people who need. So if you were a farmer wanting to farm, you had to take this land from the royal class, give them a royalty. That is the word from where royalty has come in. The money given to the royal class, that is royalty. Of course, today it comes into the movie business, the publishing business, royalty. But the origin of the term royalty is from this word. So the peasants, the farmers, if you run a market, you were a goldsmith, a locksmith, you had to take this land from the royal class and pay them a royalty, or pay them a rent, or pay them a lease for using their asset. That is the term from where that gradually migrated into English and it became real estate. Even today, when you buy any land, any property, anything, people fail to realize that they are still paying the royal class a certain amount of royalty, or a certain amount of what today the word has changed from royalty to what? To tax. Today you buy any property anywhere in the world, or almost anywhere in the world, you have to pay a certain amount of tax to the who? Who is the royal class today? We could say to the government, or to the authorities. So either you pay to you have municipal taxes, you have property taxes, you continue to pay. That is from where the origins of real estate come in. Now, when you pay tax, any asset where you pay tax, where you pay a certain amount of monthly outgoing, you need to be very careful. Why do you need to be very careful? Because in your overall cash flow statement, what is a cash flow statement? If you all have done the second level of happiness fundamentals of investing, you all will know, but I will give you a brief. A cash flow statement, you can have a company's cash flow statement, you can have a personal cash flow statement. A cash flow statement in any business in life shows what is your cash flow. So it's a very simple thing you can make. What is your monthly incoming in cash? What is your monthly outgoing in cash? So if your monthly incoming in cash is 140 rupees and your monthly outgoing in cash is 120 rupees, what is your net cash flow? What is your net cash flow? First minus the second, that is around 20 rupees. 140 minus 120, that is 20 rupees is your net cash flow. Now with real estate, especially if you are looking at investing in real estate, cash flow is very important because you regularly need cash flow to maintain the real estate. From an investor's point of view, since we are looking at real estate here primarily from an investor's point of view, the first way people create or traditionally have created wealth from real estate, I am saying traditionally, not is by the way of yield. Yield, what is yield? Any business gives you a monthly or a daily or a weekly yield. Yield is the income earned from an asset. So again, where is the term yield coming from? Where does the term yield come from? Once again, if you look at farmers, you look at a lot of these terms come from the Middle Ages, because that is when we started recording history also, and a lot of emergence of entrepreneurs and business came into the world. So yield is your monthly return or your monthly income, and yield comes from farmers. So you had farmers who would grow vegetables, who would grow fruits. This was their yield. So if you plant a seed and the tree grows and it gives you 100 apple fruits, that 100 apple fruits is your yield. And today, even if you are a farmer or farmer, you ask them what is your yield of wheat, they will tell you it is 50 tons or 10 tons or 1 ton. Now these fruits, these vegetables, when sold, they give you an income. That is the term yield came from. Later on, this term was used in the financial space, it is used in the stock market, it is used with investing. If you invest in an asset, you always ask what is the yield it gives me, is it a monthly yield, is it a yearly yield, or a weekly yield. So in real estate, what is the yield? When you invest in real estate, what is the yield? I am sure all of you might have said a few answers, and I am sure a lot of you might be right also. Your yield in real estate is rent or lease. Rent or lease. Today we call it lease. I will come to the legal aspect. That is your return on real estate. So earlier, royals, as we said, the royal estate, how would they earn their money? How would they earn their thing? They would get their real estate to work for them. They owned land, they owned assets. They would give it on lease, they would give it on rent, they would take royalties for their assets, and they would get a monthly yield. So that was how they funded their lavish lifestyle, how they funded whatever they want to. Now, in modern times, till some time ago, in a place like India, especially a place like Mumbai, you had the earlier Rent Act. What had happened to real estate in India? You had the Rent Act, which was in favor of tenants. Who are tenants? What is the Rent Act? When you give your asset, when you give your land, when you give your house, when you give your commercial or residential real estate on rent, the tenant pays you a monthly yield, for which you take a security deposit and you get a monthly yield. Now, what happened with the Rent Act? This was drafted under the British to protect the rights of people taking assets on rent. What happened? A large part of the act was very biased. Why was it biased? Was because somehow your asset, what is your asset? If you buy a property, if you buy a house, that house is your asset. If it is bought without a loan. So if you look at a balance sheet, your asset, if you buy it without a loan, that is your asset. If you buy it with a bank loan, it is not your asset, it is the asset of the bank. It is not your asset, it is the asset of the bank. So you buy a property, you get a monthly income in the form of a yield or a rent. But earlier, till around 15-20 years ago, when the Rent Act was still very strong, people would avoid giving their places on rent. Why? Because of a lack of security. When does your land or your real estate start giving you yield? Is when you give it on rent. And when will you give it on rent? Is when you are sure that your asset is protected. I know of instances, and I'm sure all of you also might be knowing of cases wherein an owner has given his land or his property on rent, and a lot of misfortunate events have happened. A lot of unfortunate events have happened with this person. So either the property has been not vacated. Even today in Mumbai, you have properties where tenants continue to occupy, are not vacating old properties, and this becomes very difficult for the landlord. Again, the term landlord, if you own an asset, you become a landlord. This again, the term comes back to the medieval times where you had lords, you had kings, you had duchesses who owned land. So as a landlord, rights were not protected in India because of the act. So if you are a landlord, your rights are not protected. One of the reasons this was done was because earlier landlords had a very ruthless reputation. So to protect the interest of the tenants, it was common. So if you are a tenant living in a property for X number of years, you cannot be vacated. Then you had the Rent Control Act. I want all of you to go back and study what the Rent Control Act was. The Rent Control Act today sounds very funny because even today in an area like Bedder Road, which is very close to Mr. Mukesh Ambani's new house, which is worth a couple of $1 billion, people are living in lavish apartments for as low as 80 rupees a month. This sounds very funny, but you can check it. People are living in lavish apartments and their outgoing is only 80 rupees a month. That is, they pay only 80 rupees a month to live in that apartment. It is very funny, but this is because it comes under the Rent Control Act, and now these people are tenants. But since they have lived so many years, somehow they have become like quasi-owners. So somehow it is as if they are owners, and the actual owners cannot vacate them, and things are very difficult. Of course, I also understand the fact that if you are living in a property for so long, you have emotional attachment, and it is not fair to remove somebody's roof. I completely understand that. But from the point of view of an investor, today if you are going to invest in a property and you are giving it on rent and you have the Rent Control Act in place, Will you, let me ask you honestly, will you give your property, let us say you have 100 rupees, you take some loan, you take some EMI, or you have a crore, you go out, buy a property, will you give it on rent if your asset is not protected? Will you give it on rent if your asset is not protected? Two, if you cannot increase the rent over a period of time based on inflation. Today, if your rent is 10,000 rupees and you are told that even after 30 years, your son will get only 10,000 rupees, even though the asset price is increased. Three, you can never sell that asset because you need to take the permission of the person living there who you have given it. Will you give it on rent? Most likely, when you look at all this, you will say, no, I will not give it on rent. I had a close family friend who was living in the Middle East. They had an apartment, they had given it on rent. When they came back, they came to know that the tenants had sold their property to somebody else and taken money and gone away. So these are all risks which come with real estate. People always tend to assume that real estate is very easy, very simple. No, it is not. Without knowledge, it is not easy. So these are risks you take as a landlord. But in the recent years, what has happened is when it comes to yield, so in the past, very few people were giving their properties on rent. This was creating a challenge for even landowners. So if you own the land, it is a problem because your asset is not working for you. It is not creating yield, it is not creating cash flow, it is not giving you returns. You know the way stocks give you dividends. Stocks give you dividends. Same way real estate gives you rent. But people were keeping their properties locked. The place I live in, my building, almost everybody who lives outside or has a second flat, everybody was keeping their property locked. In fact, even me, I was keeping my properties locked because I said it is better not to give it on rent or lease when my asset is not protected. I don't want to take the risk of my asset which is worth several crores for a few thousand or a few lakhs. Now, of course, later on, luckily, touch wood, laws changed, laws improved, and the concept of leasing came into play. Leasing or leave and license. That is the legal term, which is leave and license. What is a leave and license agreement? What is a leave and license? You know, in the difference is just a legal agreement, but in real estate, legal agreements are very important. Just like in business today, legal agreements are very important. In real estate, legal agreements are extremely important. So just the word difference, you giving your property on rent, and you giving your property on lease become two different agreements. What is a leave and license agreement? A leave and license agreement is in fact the agreement of licensee and licensor. Licensee and licensor. This agreement or this concept has been into place for quite some time in the area of intellectual property. So if you are somebody who manufactures software, you are somebody who writes a book, you are somebody who writes a song, you own the property, you are the licensor. That is, you give a license to somebody else to use your property. So if you are somebody who makes movies, you are the licensor. You give the rights to the licensee. There is just a very different small word difference: licensor, licensee. Like you have franchisor, franchisee. What is a franchisor, franchisee? A franchisor is somebody who owns the system, who owns the brand, who owns the know-how. So the franchisor is McDonald's, or the franchisor is Pizza Hut, or the franchisor is KFC. They own the brand, they own the knowledge, they own the know-how. They give out a franchisee to somebody to use that knowledge, to use that know-how, to create returns or to benefit. Similarly, licensor, licensee. Licensor is somebody who owns the property, who owns the know-how, and who is the licensee? Somebody who makes use of it. Now earlier, this was there only in the space of intellectual property or software. But later on, this came into real estate, and which is very good. What happened is the Rent Act no longer applied to this. So it was not rent, it was a leave and license. What is a license? A license gives you the right to a licensee to use that asset for only a particular period of time. So if you have a leave and license agreement for a duration of 11 months, it applies only to that. So you take a security deposit So in case you have done your interiors and the persons you have leased it out to the licensee does something wrong, you have a security deposit to protect you, and at the same time, the licensee, you are the licensor since you own the real estate, you are giving it on lease, has no ownership rights. Just like in a regular license or licensee agreement, the licensee doesn't have ownership rights. So that protects your ownership. Now, when that came into being, I would suggest you go onto Google, or you could ask your teacher, they'll arrange it for you. Go through a couple of leave and license agreements. You go through the terms, because it's very interesting. When you go through these agreements, you go through these legal agreements, you get to learn a lot. So most of these lease agreements, it's very important you know these if you are planning to invest in real estate. Most of these agreements will have all sorts of clauses which protect the rights of the licensor as well as the licensee. So it says that there are no ownership transferred. The licensee can use this asset for a duration of 10 months, 11 months, 12 months. And at the same time, the obligation of the licensor or the owner of the property is XYZ, to make sure it is well maintained, to make sure the taxes are paid. Please remember the taxes of properties are always paid by the owner. They are always paid by the owner. So that usually you need to include in the lease. Now when that came in, a lot more people started giving assets, properties on lease, and because they were secure. So today, over the years, the lease business has gone up. This is very good for people taking on lease also. So if you are from out of town, you are visiting a new city, or you feel real estate prices are overpriced and you don't want to buy, you want to stay sometime on lease, it becomes easier. Because 20-30 years ago, it was very hard to get a place easily on lease because the rent act applied. So that has helped both owners of property as well as users of property who want to take the property on lease. So that is one good thing. Now this is the yield which comes in. So let us say you own a property, you have gone out, given it on lease, so you are getting a monthly yield. A yield is like a dividend on your property. But many times what happens, this is if you already have a property or you have invested in a property. The best way to analyze if property prices are overpriced or not is to look at the return, the yield you are getting on your property. What is the yield you are getting on your property will tell you if your property was overpriced or undervalued. You own a property. I'm just giving you an example. Let us say today's scenario in a city like Mumbai or Delhi or Bangalore or any major metro, you own a property today which is worth 1 crore or 1.2 crores, and you go in the market, you go out in the market and say how much will I get lease on? How much will this be leased out for? How much money can I get if I let somebody else use this asset for a duration of 1 month? How much will I get? Today, if you check, in a city like Bombay, you will get not more than 20,000. Not more than 20,000, Now what happens when a property worth 1.2 crores, you can get for a month at 20,000. Let us say we look at the alternative use of money or asset. The alternate use, what is the alternate use of this property? What is the alternate? One alternate use, simple alternate use is you sell the property, you take 1.2 crores, you invest at 1.2 crores in a secure bank FD which gives you 8 to 9% approximately, depending which time you are, but approximately let us say interest rates in India are relatively higher compared to the developed world where interest rates are very low, 0%, 0.1% in Japan, very low. So in India, interest rates are 8 to 9%. That works out to be around 10 lakh rupees, if my maths is right. Around 10 lakh rupees a year, your money gives you. That asset gives you 10 lakh rupees a year. But at 20,000 rupees a month, the same apartment which you're renting out to somebody, so you make a lease agreement with that person, you rent it out to somebody, you are making 20,000 rupees. Now 20,000 rupees multiplied by 12 is how much? 2,40,000. Now compare 2,40,000 and compare 10 lakhs. Is there a difference? Is there a major difference between the two? I am assuming there is. There is a major difference. Now this 2,40,000, you have not considered the cost of your broker, because you need to pay 1 month brokerage. So minus 1 month brokerage, and that is 2,20,000. You have not considered your cost of monthly maintenance, because your maintenance taxes, of course electricity, energy bills are paid by the person taking your property on lease, but you can remove that. You have not considered the manpower involved. You need to be constantly there. If the person you have given your apartment on lease on has some issue, he will call. You have not considered that. So at the end of it, net, you make around 2,10,000 or 2 lakhs. But on the other hand, had you kept in a secure, I am not even saying use your knowledge, use your mind, go invest in an asset, go invest in a business, go invest in a stock. I am saying very simple, do nothing, invest it in a simple fixed deposit, secure. Now when you compare this, you wonder, what is it that still makes people invest in real estate when there is such a major gap between rental yield and the yield you get. Always compare the alternative uses of money. Every 1 rupee, you can do a million things with that. Now, ideally, logically, what should logic say? That 1 rupee will attract the asset which gives it the best return with the minimal risk. But in the real world, is this true? The same example we shared now, which said that 1.2 crores kept in the bank makes you 10 lakhs. What is the risk? If you keep it in a good nationalized bank, what is the risk? Almost zero risk, almost no risk. Return much higher, less risk, more return. That is what we believe. Take less risk, get more return. And you look at the other side, you look at where you give it on lease. Risk is relatively higher, effort is more, return is less. But still, what has happened? What is money attracting more? Is more money flowing towards fixed deposits or there? Many people still do not look at it this way. So, since it is not a completely rational process, what happens? You get opportunities. When such a thing happens and you own an asset, maybe it is a good time to exit and take that asset somewhere else. Now, in the midst of all this, why are still people looking at it? Because in recent times, people stopped looking at real estate only as a source of yield. Traditionally, real estate was a source only of yield. So the royal class owned land, owned assets, and it was only a source of yield. But later on, they decided, we need to justify what we are doing. It cannot be only a source of yield, it has to also be a source of capital appreciation. Real estate also has to be a source of capital appreciation. What is capital appreciation? We will come to. But you look at, let us say, you look at capital appreciation only. Yes, in the past, as we go back to our time machine, which took us back 10 years, there was a lot of capital appreciation in real estate. So somebody invested or bought for 4 lakhs, sold it for 1.5 to 2 crores. That is capital appreciation, that happened. But does capital appreciation always happen in real estate? Is that a guarantee? When we go back to the beginning of our program, we said mankind has assumed that real estate is a rare commodity, land is not being built, and real estate prices always go up. I want all of you to look at Tokyo. Look at Japan, look at Tokyo. Let us go back in our time machine, our financial time machine, which takes back to different eras, which helps us learn. Let us say we take the financial time machine, we take a time machine and go back to Tokyo, 1989, 1990. One of my close uncles worked with a very big hedge fund and investment bank. He said he was in Tokyo in those days, and everybody was crazy about real estate. You had these high-rise buildings coming up, and everybody wanted to put money in real estate. So the local Japanese investors wanted to put money in real estate. You had big funds wanting to put money in real estate. You had banks going crazy over giving loans to real estate. What is the model of a bank? A bank keeps your money, gives you 8% interest, and goes ahead and gives this money to somebody else and charges them 14-15% interest. That is the model. and in the middle, they make their money. So banks were saying in Japan that real estate prices are constantly going up. So what we should do? It's safe to give loans to people. Let them go and buy real estate and let them give us XYZ percentage per month. So they were very happy. Funds were putting money in real estate because they said we develop prime property in Japan, in Tokyo, and the prices keep going up. We make money, our investors make money. So a lot of money kept going into real estate. Now, at some point, a few people said this is overvalued. A few people said, Japanese real estate seems very overvalued because the entire city of Tokyo, which is not a very big city, if any of you will happen to visit, it's a beautiful city. You have got fast bullet trains, you have got very interesting, exciting city, but not a very big city. Now the entire value of Tokyo city was higher than the entire GDP of America. If you sold Tokyo city, you could buy entire America with the land, with the GDP 6 or 7 times. It ran into trillions of dollars. Now when you think of that, a small place like Tokyo is worth so much more than a land like America, you start wondering, are things overpriced? Now what happened? People did think that things are overpriced. But the thing with bubbles is they can go on and on forever. So even though a few people said this was a bubble, property prices in Tokyo kept going up for 4 to 5 years. They kept going up. So today it is 100, people say it is expensive, it is 110, 120, 200, 300, 400. And at the same time, as property prices were going up, the index, the Nikkei, that is like how we in India have the Sensex and Nifty, they have the Nikkei, kept going up. It touched over 40,000, crossed 40,000. Now everybody said Japan is the new tiger economy, the new age economy which is going to overtake the West. And whenever you would travel, whenever you would visit anywhere, you would go to Paris, you would go to London, you had a lot of Japanese tourists, sweet guys, taking photos all around. So that is what was happening. Money was flowing into Japan. But in the midst of this, prices kept going up. And whoever put money in Japanese real estate, yes, if you put it in year 1 of the bubble, you exited in year 3 or 4, you are happy. But if you put it in year 4, if you happen to put it in year 4, till date, 20 years down the line today, or more than 20 years down the line, you would have not recovered your money. 20 years you would have not recovered your money. Japan is a beautiful example. If you want to learn about real estate or investing, so whoever says that real estate prices always go up, you need to think twice, because they don't always go up. That is what happened in Japan. A lot of hedge funds lost money, a lot of funds lost money, a lot of banks lost money. But more than all this, who lost real money was the common man, the common Japanese man who lost the most money. Now we will come to real estate appreciation in our next session. Thank you.